Um, on that strong bull bar that was high one because of this pause, was reasonable entry and risking below, but bulls had only one strong bar at this point. Every bar was overlapping, but at the same time, the bears, they never managed to make money, and bulls who took high one there, they managed to take 2 to 1. So probably it was reasonable to be aggressive and enter basically high 2 for second leg up. Like here, this is high 1 and this is high 2. And it did break out with strong bull bar and again weak follow through. So there was continuation of spiking channel. Was reasonable attempt to fade the bear bar, and also it was reasonable to take high 1 after it dropped bears and basically make 2-bar reversal.
Yeah, and at this point also, sorry, we said that we were at the level of yesterday's close, and we were expecting, as we were in an uptrend, we were expecting those guys that close positions there to continue going higher. That's what we said yesterday.
Yeah,
One of the scenarios was to see the guys that closed positions yesterday to enter again and to continue the uptrend.
yeah,
And
yeah,
the high
and
of yesterday high was another important level,
which they did not reach. They missed it by that level. Yeah.
That level, but also yesterday high. That one exactly.
Yeah.
That one, yesterday high.
They broke the
Exactly.
yesterday high, left the gap, and continue
Exactly.
moving higher. So here that was the first leg into the previous day close, and strong bear bar, and they did not get a follow through. Another second leg, so they broke that profit taking level. They dropped sellers here, and that was the first hour. So after the first hour, market state changed. It was on a channel, and then it turned into the trend. It printed 4 consecutive bull bars. It managed to break out previous day high and close 2 bars. It had a weak pullback and then high 1 entry from weak bar, but reasonable since this is in very steep bull channel.
But something that we talked about yesterday, but I didn't define it completely. If you zoom out and go to and look left to that cluster at the high, there, if you see that, I don't know how Albrecht call it, but I know that he look at that too. If you see that cluster of candles in a higher time frame there, you have what ICT call the order block, that basically is the lower, or the lower low of the lower low made by a close or open of a candle, not by the high or low. You have a one line there, exactly at that level. Put put a line at the highest close, exactly, and the lowest low close, or below go below there, exactly there. So that gives you, if you go to a higher time frame, the open and the close of the candle in a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, like 20 times, so like 1 hour, something like that. So if you go back to today, that is what they call it, an order block, and you see that it tested that high, the higher high we have so far today, test that block of orders.
Uh, so just the bottom of the trending range.
Yeah, exactly. So if you look that in a higher time frame, like 1 hour, that's one candle, right?
Mm-hmm.
With the open and the close defined by those two lines you drew,
Yeah.
right? So going to today's high, what is expected is the price to test that level, and from them you it's a high probability short. I don't know how Albrook's call it, but on ICT again, that is called order block. So you wait the price to go to the order block. That basically is the last it's the last candle where people where bears took a short, right? So now they are defending that level, like in a trending range, right? So
Mm-hmm.
from here, it's a point, a critical point where you see if the price wants to continue higher to find a new fair value, or if they are strong enough to protect the shorts.
So for the Albrook's if you consider that move down, then the important will be that previous bar last bull bar close, because basically there's where they will want to exit those who dropped. And for the lower level, I'm not sure. Just the probably since that was tight training range, just the bottom training range, top of the training range, and use those levels. Or as you say, on based on higher time frame, just mark the close of that 1 hour bar. So for example, 30-minute bar, it started here, it closed here. That was the close of the 30-minute bar.
Yes.
That then it was doji. Next 30-minute bar. Yeah, it started here.
Usually that guy used it in 1 hour and 4 hour. 30 minutes too, but high probabilities so far. What I know so far, they use it in 1 hour and 4 hour, and it really works. It's like the order blocks and fair value gaps are the two strongest concept that this guy used it. That is why yesterday I asked you to trace that line. Again, I know that Albrook's use it, but I don't know how on how he call it. But once I find it, I will see the analogy between those, because I think that that guy ICT took a lot of concepts from Albrook's, so it has to. And also, what he does is he split that range with a 50% level and puts the entry at 50% of that order block. We need to see it in a higher time frame to define what is because sometimes he also takes the tails and wicks, but we can see it in another moment.
The 50% just the point of control.
Yes, yes, exactly. But you need to. I have to see it better to define 50% of what, because now we trace two lines that I am not sure that they are okay. I'm not 100% sure.
Yeah, I would just left up as the high. So if it managed to make new high, then probably important,
Okay.
because right now we tested the bottom of that range and it already present here.
Okay.
At the moment the bar 34 it was inside bar, it dropped sellers below. This is something that I noticed, but can be part of the setup. If it's trending range day, like this one, it's trending range because it's big up, big down, which is confusion. So it's trending range, and once the market in a trending range, once it reached the bottom of the range, as the part of the counter trend, you can look for inside bars like here and basically start to fade it. Yeah, basically betting that this trading range at some point will fail and go to the top of the range.
Perfect.
Yeah, and some idea just to watch for those drop. Yeah, and like here try to fade, entering at the bear trap, maybe fading this bear bar and betting that they will not make 1-to-1 or something.
Here you have exactly what I was telling you. The number one bar, for example, is the example that I was saying. You can take it as an order block, and you can take the 50% of that candle, the first candle, the number one. Try to some guys use the top of the candle, yes, the open, and others take the wick, and others take the 50% of that candle. But they leave limit orders there, as you were saying, betting that you are in a trending, in a ranging, ranging mode.
Yeah.
They use that as a reference.
Yeah. Albrooks have something similar, but he will put more attention to the signal bar. So the bar 2, which provided 2-to-1. Yeah. Here, those who enter, they make money and they can be willing to enter again. And because this bar provided that strong move, so
That makes
this,
a lot of
yeah,
sense.
yeah.
So
So
your level is the wick of that. Put the line, please. There, what the level you were paying attention. Ah, perfect. Yes, makes sense. It's from the kick, and if you see, it went to the tick so
yeah,
far.
yeah, and it's um it's on the video course as well. Basically, one of the criteria to focus. And any bar that provide a strong move, the entry bars, they are important. Like here, this bar, but it not in here because they just
Yeah.
push lower.
Yes. Yes.
Yeah,
Of course. Of course.
but bar like here because this entry bar high one, it provides a move up. And same for the bears. Uh, in this example, probably that was the entry bar after the failed wedge, so that can be important. And
Level.
here,
Right.
about those, I'm not sure.
That is in the because that is not in the fundamentals. That is in how to trade, right?
Probably I'm not
Okay.
exactly remember. So now it's an it's also opening. Now it's trending range and those points they closed 51 and reached almost 60. Yeah, it's those points are
Look
not
the
that
look the
useful
ghost.
because of volatility. So this is I1. bar 36 is the pre-hour. So on the bar close, there can be profit taking. For example, that was the 2 hour, and after such strong bar, there can be profit taking and then pull back to 50%. Maybe those who trapped, they will buy here to exit at break even.
What the fuck?
When I press it. So this is first pull bar after that reversal from bar 23. If bulls will manage to take 1-to-1, so they are making money. For now, only bears making money. Bulls fail. I think, yeah, here and here. That bull bar managed to close 11 points, so it continued to probably 20 points. This is spike and channel. It's already tested the channel closed above it. Previous bar did not post above the prop zone. If bulls manage to get 3 consecutive bull bars, then it can potentially turn into always in long, and then they will even now with the 2 bar they can expect second leg up. That probably was a wedge on a lower time frame. Those who entered and took profit, they entered back. This is high 1. If there will be pullback for second leg, and then high 2, it will be a high probability entry. Bulls did 20 points. This is usually like the big target, especially for the pullback after a strong leg down. Since this is potential trending range, it can be reversal, they can continue, but for now it trending range, and there is open gaps that in trending range have to be filled. The gap is here and here. It closed all bull gaps. There was open gap which was closed.
I was talking with the microphone off. Would you wait for a third candle up to confirm that it is in a
Always in long.
the breakout?
With the 3 consecutive pull bars, it will be always in long.
Okay.
Probably I will better to wait for pullback to enter at high 1, or maybe try that Romine setup. For now, to see that bull are capable to make money at 1-to-1. And the aggressive bulls who enter with the target of the previous body, they making money. They are overlapping, but this is trending range.
Aggressive entered the candle close, right?
Second,
The aggressive buyers that you mentioned enter at candle 36 at the candle close. There?
those who expect one to take to 1-to-1.
Yes, at the candle at the candle close.
Uh, yeah, for the one that I'm looking, if those who enter with the stop order at high one, are they able to make money? Because if they can make money with the stop order, that means it's not a trending range and bulls are making, because if it's trending range, then they will fail and this strong bull bar will fail, then the strong bear bar again will fail, and no one of them will be able to make money with stop orders.
Perfect.
So they miss it by 2 ticks, and bar closed inside the previous bar. Uh, this is disappointment for them. If the next bar will close bear bar, it will be 2-bar reversal, and those who did not manage to take 1-to-1, they can start to exiting. For now, they managed to close outside the drop zone.
You at that level, you also have the ones that took shorts on the close of the big bar or low of the big bear bar, candle 31. We are reaching that level, the low of that candle, the 31. You have people taking shorts there.
Mm,
So
yeah, this is gap, then it probably will be filled during the day. I think that bar was continuation. There was very small pause, so it can be considered as one big bar. From the Ali, I do remember he was talking about when the market have the in trending range, it has the strong leg up, strong leg down, and there is a high probability that at 50% of that second leg, the reversal. So here there's a high probability that they will end up staying in trending range at the below that 50%, or it will broke up and will stay at the higher part of that half of that second reversal.
okay. I believe we can put the speed at 2 there. What do you think? There.
So it's now testing the EMA 50%. At the 50%, there will be sellers because that was 1 hour close. Those who trapped here, they will add more here and take it break even at 50%. So at that point, those who sell it with limit, they are betting that their higher chance that market will reach low before it reached high. would have 4 consecutive bull bars, always in long. Bulls making money, reached almost 2 to 1, closed 30 points, closed above EMA. The second bar managed to close above EMA with sign of strength. They will still going to close the gap, and how to enter, probably could bet for second leg up.
Could you repeat, please, what did you say about that 50%? You pointed a candle if you want to pause.
From the alley.
Yeah, you said something that
Yeah,
I didn't get it. You said at the second 50%,
yeah,
or
if
from the beginning, if you want.
yeah, the if market in trending range, which is it is at the moment because it has big up, big down, then it's very often that so market will stay in trending range. Probably it will not be in that wide trending range for the entire day like that. Most often after big up, big down, it will now stay at that 50% of that like down. It will stay either at the bottom part of that 50%, so either it will be ranging here, or instead it will broke up, and then it will ranging here for the rest of the day.
Good, right, right. I got that, and that is based on statistics, right? Based on data and based on observations, right? So after that, you said something about the 50% of that last down move. You said something that I.
Let's say that there is 1 hour close was here, and the previous 1 hour close was here. So
Okay.
that 1 hour close closed very bullish. It's big bull bar, and now this bar is completely opposite. It closed very bearish. So there is trapped buyers, and now it's a strong reversal. They will buy here again the close. So big bar closed here. They buy again at the close, and their break even is at 50%, which is here. So now they were buying, and they will take profit at break even.
Okay. Okay, because they were long from the previous 1 hour candle. So that is why you say the break even point is at that middle point, right? Because they bought 2 times at the top of the first 1 hour and at the bottom of the second candle in one
Yeah,
hour, right?
yeah, yeah.
Perfect, perfect, perfect.
Maybe they did not bolt there, but they were just holding the long position, and then it unexpectedly turned down. They disappointed, and they want to exit. They don't want to exit with a loss because their profit was here. If they exiting here, this is their loss. Because they if they both there and holding, they have to take profit. If they're not taking profit and it's reversing, it's turning into the loss because they can do profit at any time and secure it. And because of that, they considering that this is their last entry, they are willing to exit here, given how strong bear leg. It's low probability that it will reach here. So instead, they're scaling in order to exit at break even, and it will be the same as if they exit at the top here.
Yeah, basically, the break-even point at the 50% is because they were doing something that DCA, let's say, adding, scaling
Yeah,
in.
yeah,
That is why you have the break-even at the 50%.
yeah,
Okay.
yeah. And some other traders they will they will measure the 50% of the high and low, which is here, and they will bet that there is 60% chance that it will reach the last low, because this is strong leg down. Maybe they look for a second leg, and it will at least swept that previous low, and only 40% that it will just continue go higher and reach that high. So their risk is 1-to-1 here and here, 1-to-1, and 60% chance that it will reach the bottom before it reach the top.
Okay.
And same are doing those buyers with that strong leg up. They were probably buying, for example, here, and betting that there's 60% chance that it will go here before it will sweep the low of the day. Yeah, and because of that, there can be more sellers right now, but strong pull bar and 4 consecutive bull bars, so it's always in long. And those bulls can expect second leg up. At the same time, bears had strong leg down that can be second leg down, or given how strong that leg was, it can be they can expect second leg down. But with such a strong buying pressure, it increasing the chance that this is exhaustion gap. So it has the parabolic climax up and now parabolic climax down. Now it's reversing up again. Now, if the next bar close bearish, for example, inside bear bar, I know, because bulls are now making money. So that was the one state of the market where the only bulls were making money and not bears. Then it was another state of the market where the only bears making money and not bulls. And that can be a transition back into the previous state where only bulls are making money. Is now going to be inside bar. With inside bar, it increase the probability to that it will there's trap at 50%, but at weak bear bar, bulls manage to close in one bar above EMA. 50% basically bet that the bears will get second leg down. Now bulls have open gap here and here. Bears have gap here. Yeah, the bear had a stronger bars, so I think it's reasonable to bet to fade it. So basically, one thing about that bull bar. The stop at minimum measured move of that fourth bull bar, which is here, or probably at the last high. and the bet is that we'll reach that low first.
As a second leg continuation
This
for the Bears. No, the when you put the take profit, thinking on a second leg down.
it's I think it's less probability. It's trending range day, so it's better to treat it as the trending range. Don't expect it to turn into
Okay,
the
it,
trend.
it would be the situation where you said trending range at the bottom or trending range of the top of the 50%. So you are betting to continue the range in the bottom, right?
For now, this is the top of the range, and this is the bottom of the range.
But you said that there is a high probability to continue the range in the bottom half of that big range, right? Based
Uh,
on Ali's comments.
not high probability, but very often what market will do after a big up, big down. Basically, it looks something like that. It have like big up, big down, and then it start turning range coiling. Yeah, basically making the triangle.
Okay.
Yeah, but it usually it will not be perfectly in the middle. Usually it will be big up, big down, and then it will start coiling
Okay.
at the half of that leg, or maybe it's that big up, big down, and then it will do the at the top of the 50%.
Okay.
So for now, there's possible drop. They got weak follow through. Those at 1-to-1 managed to make 2-to-1.
Oh yes, already. Yes.
So some profit taking at 50%, but they managed to close bull bar higher than the bear bar, but not higher than the strong bull bar. They need to close above the drop zone to continue go higher. They closed 29 points, so if they manage to close 30 points plus free tick, it will be a sign of strength for bulls. Now they closed bar above the EMA again, so if managed to close second bar at above EMA, it will be sign of strength. Bar 42 is 30-minute bar, so it can trigger. Yeah, for now, I'm thinking that there is 1 hour bull bar, which is from here to here, so strong bull bar. It opened. Okay, yeah, it opened here and closed here, so from 12 to 24, and then there is bear bar that opened here and closed here, and that bear bar much stronger, so it completely reversed that bull bar. Those bulls disappointed. They want to exit here, so they added more. It closed here because that bar closed here, so they added more, and at 50%, they are now taking profit. So it is the same as if they would exit here at the top of that bar. This is another inside bar now, bar 42. If they manage to trigger the low of that bar 42, is a short signal, short entry, and stop then above that bar. So it's a good short attempt, but bulls had strong leg up but this is trending range day. Bears had strong, strong, yeah, but it's possible climactic as well.
You have another inside bar there. The 42 is an inside bar.
Yeah, this is what I'm saying. The 42 is inside bar, and because of that, this is good entry for short because you
Okay.
get you have limited risk. If you enter below the bar,
Yes.
your stop is above the bar. Basically, you could reverse if it failed. At the moment I see it's triggered, and for example, if it triggered, if it failed, then the stop here and some will reverse, betting that because it's the same as the breakout mode, so it's trending range, and then it breaking up, but it possibly can reverse, and in that case, that was failed breakout and basically
Perfect.
reversal. Yeah.
Continue.
So that was a good low one entry, but Bulls had very strong leg, possible leg one, leg two, and that was their second leg. They did not manage to close 30 points. Bulls only did 10 points. It's not enough for to continue, but Bulls, the Bears did 10 points. Bulls cannot close 2 bars above EMA. For now, there is some profit taking at 50%. So for now, increase the probability to as the low. Those buyers who manage to make 2 to 1, they will enter back here. So this level is important. Now the disappointed bulls, they will try to exit at break even here.
At the low of the 41, you mean? The break even?
Yes, yeah, the 50% is here. Basically at the EMA. Another point is that pairs are making money. Those who entered with that inside bar, they get 1 to 1. So if there's gonna be a pullback, there will be sellers who will enter back, who took 1 to 1, they will try to enter again. So that's the selling pressure. Another selling pressure is that the trapped bulls, they are added here and they will try to exit break even. Close bull bar. So it's I1 for bulls, and it's reasonable entry because bears failed to do more than 10 points. So that was 10 points pullback, which is like minimum, like a target for the pullback, same as bulls did here for 20 points. That was high one for bulls, and they can expect second leg up after that. those who entered at that bar 39, they're still holding for 1-1. That was another sign because bears did not manage to take low of that bar, and then they are still in trade. Bears got only 2 bear bar. It was high 1, and now strong bull bar. So this is their second leg up.
Whoa. That's close. That closed the gap.
It's happened again. I don't know why this thing is.
You can disable that, but it's going to. I can remember from where it's going to take time. Yes, closed.
Yeah.
But not that one.
Probably that bar
This
will be
one.
important.
Yeah.
It's like the entry bar for that. Those who entered at high 1, they make 1-1 and 2-1. Now there's trapped sellers. Their break even is basically the test of the breakout. The bulls closed above the profit taking with 2-1 and above that 61.8 that mother bar. So that means they are going for the next target. This is second leg for the bulls. If they will get the bear bar, it will be basically low 2, but given that they are closing the gap, this is the exhaustion gap. So the bull, this is a sign of strength for bulls. Now bulls leaving the gaps, which can be closed at some point. That gap was closed, but there is another gap here. The break even for the bears is here. They closed 20 points and 1 tick. Not a good follow through after strong pull bar after the breakout, but still weak entry bar for sellers. 1 tick below. There can be sellers who will sell here in order to take break even, which will be even lower.
The break, you said break even of sellers.
Yeah, there is trapped sellers here.
Yes.
If they sell 1 tick below that bar, their break even is here.
You assume that when they scale in with the same size, right? That is why you
Yeah,
take the 50%.
double the size. Yeah.
I don't know. I don't know why it's I'm not following that logic that they. But yes, it's of course it's possibility that they try to scale in. They bet to the price to continue down. It's one possibility, right? It's true.
No, yeah, no, they're betting not to for they just want to exit. They
Yeah, I believe that I know why. It's because I haven't my brain is set to never add to a losing position. But it's of course, if you want to exit, if you add against your first entry, then you have your break even half the way down, right? But because my brain is set to not never add to a losing position, that is why
yeah,
I I refuse that concept.
when you scale in, when you add, you increase your probability. So by adding, you can be your probability can be up to 90% or even more. But uh, basically, your risk is increasing, and uh, maybe this is not what you're supposed to do, but this is what like big monies are doing because they can do that.
Exactly, but you mean scale in a losing position, in a
Yeah,
losing trade, right? Because
yeah,
you enter, let's say that you shorted the low of candle 43, right? So the low of the 43, right? You short from there. Price reverse. So at the low of bar 46, you are in a losing trade. So you
yeah,
add there, you say that you increase the probability because, of course, you move the break even to a higher point. You're now you are closer to your break even. Instead of the low of 43, now you are half the way. That is
yeah,
what you are saying?
yeah,
Okay. And of course, you increase the risk, and as it is inverse, it has inverse relationship. um, you increase the probability, but you increase the sorry, you increase the risk, you reduce the probability.
no, you increase the probability because now with the increased risk, you have increased probability now because your win rate can
Yes,
be
yes, sorry, yes.
yeah,
Higher probability, uh, no, higher probability, lower risk.
no
When you have a higher probability, you have a low risk. It's inverse. The relationship is inverse because the expected value, it has two variables, the probability and the risk. And if you maintain the expected value, if you increase the probability, you reduce your risk. It is the relationship is inverse because you can have
you reduce your profit probability with the you increase you reduce your profit chance because so you when you scaled in you increase your probability you increase your risk but your profit is decreasing because now you are scaling in just not to
okay,
not to get more
okay.
but just to get break even.
I agree because you introduce another variable that is scaling in. Okay, okay. It's not the same as when you you just have only one enter, that you have a lower probability enter with a higher risk, or a high probability with. But this, now, yeah, I follow you. Yes, because you are scaling in. That is why you are saying that, right?
Hmm.
Okay, okay.
Now it's some kind of
Yes,
pause.
I didn't watch the scale in videos yet. That is why I have to think it now.
Yeah, this is mostly why the 50% the pullbacks are happening because they are uh, most of them they are most likely entering exiting at the not not just at 50%, but they are trying to exit at break even after the disappointment. Maybe like here they had a strong bear bar, now they want to exit. uh, Basically their last entry was at the close of that bar. They are scaling in, adding more. So once the bar closed, they adding more, and on a pullback they exiting at break even. So at that point, if they scaled in their losing position because this is what they lost. They could take profit here and have money, but now price is here, and they could take less money when they take profit, but they want to take profit here, so they are scaling in, increasing their risk, increasing their probability to exit here. Yeah, because they are it lower probability that market will reach their exit point, and they can basically reduce by half.
Yes, you are. We are closer. Yes, makes completely sense. Yes, yes, yes. I follow you. Yes.
Yeah, and when market do not let them to exit at break even or at crutch, that means they are trapped, and this is why those levels are become important. Uh, in trending range, usually there is no trap buyers or sellers because it's like it's are forgiving on trending range days, and on the trend days, it's often happened.
Yes, I am watching that. Scale in is the video 35 from how to trade prerequisites, and I am 1 week from that. Yes. I watched some videos on YouTube about scaling in, but not algorithms. And it says scaling in, who scales in and why, and scaling in into losing positions, and two sample strategies. Yes, I have to watch those videos this week.
Yeah, those lessons they are not for you to scale in, but just to understand how
Yes,
others are doing that, and basically, uh,
what you were explaining.
mm,
Yes,
yeah, and
wise.
for the like the previous days when we were watching the previous day uh, previous highs as the target. If there are sellers, are they making money when they selling and scaling in? If there is a pullback into the breakout point, that means they were selling here, they were at loss, adding more, even more loss, adding more, even more loss. At some point, it's reversing. They exiting at
They are
break
break
even with the
even.
first trade, and then with profit with their other entries, and that
That's
meaning
that's the that's the strategy there when they skill in, right?
yeah, one of the strategy, and this is how they basically increasing the risk by adding more and going against it, but also increasing the probability because now they are making money even though they entered too early.
Perfect, perfect. But you have to have a big pocket for that.
Yeah,
Motherfucker, that is why I thought that it's not, you realize that it's not the first time that I can follow you with that concept, and it's because I'm super structured and I didn't watch that. And this, my motivation for this week is going to be that one.
Yeah, better to finish the course as fast as they
Yes.
can, and then focus on practicing, on trading, just to, first to know what to expect, but what to watch. In training range days, the it's profitable to short the second legs and wedges. Uh, it's not the best example because it's very volatile, very big range. But if it's training range day, now they got the second leg, so there can be some fading this. But this is exhaustion gap, and uh, with that, there is high probability that it will test the top of the range. Bar 48, another 1 hour bar. So now there is that's the bull bar, and then bear bar here, and now there is another bull bar. That means they closed above the break-even point.
Mm-hmm.
They closed gap here, but now have a gap opened here. With some expanding triangle. It says that the entry of that signal bar and the top of the channel, top of the trending line. Other lines here.
That scale in you're already in book 2, right?
Yeah.
They discuss that is part of book 2, right? The scaling, right?
I'm not sure. It still did not.
Okay.
I'm on half, but it still did not cover it. Maybe on third book. Right now, this is. It's too late to get long because it's closer to top of the range.
Mm-hmm.
Some could try to fade the second leg of the trending range. It broke the half of that second leg down of that reversal. So there's possibility it will holding now at the top of that range. Bulls closed 20 points plus free tick, so they can go higher. They already reached 25 points, 30 points here.
Now just wait, right? 1, 2,
Yeah, for
maybe a
now.
3 there. Yes.
So it's expanding triangle breakout mode. Uh, and
Give me a second, please. Continue, but give me a second. Sorry, I'm back. I am completely upset with me. I don't know I don't know why I postpone. Uh, I was going good with the course and I postpone it. We need to change that this week. So we have a new inside bar there so far.
Yeah, it's that bar expanding triangle. Uh, Trending range, that's the second leg up, top of the range.
Everything
But
to be defined.
they did close 24 points. Uh, they reached 28 points. The 30 points will be here, so it's very close to targets. This is measured move of that first leg. Also, there is leg one, leg one 33 points, and the second leg, but that's some profit taking area, and this profit taking area will close the gap, and then bulls have the gap open here and here.
Have you seen that they both or also Brad and Rose used the small windows um, on a higher and lower time. In this case, higher time frames. You don't like that layout?
What they do?
As I have it, the two small windows on the side to have a like a overview or a bigger picture of a higher time frame. In this case, maybe 15 minutes or 1 hour and 4 hours, something like that.
Mm-hmm. I have it, yeah, on my main chart.
Okay.
Yeah, but I try to remove everything and just leave the 5 minute chart to be focused on that. Mm.
It is imposed.
Yeah, but it's better just to skip the bars because it takes too long, especially now
Yes.
when it's trending ranging.
Yes.
It's three consecutive bars. It's triggered the inside bar low, but it's bull bar, so there were more buyers. Now it's holding. It broke that trend line. Was holding. Now broke it. Holding above.
What if
Red.
you trace from zoom out a little bit, please? Uh, what if you trace not that much? Stretch there. Yeah, perfect. No, no. Oh, sorry. I thought that we have a mark. Well, maybe from candle 7 to till now, if we have a downtrend channel there to trace a linear regression from candle 7 till now.
From here.
Yeah, or that one. Yes, from that one. From 7 to, yes, something like that. Yeah, we are in a perfect trending range. Okay.
expanding triangle, basically breakout mode. I think that this is what called the barbed wire, but he don't use that term anymore. But probably is that the case here.
The what?
Barbed wire, uh, the like the fence with sharp objects at the both sides. Do you know that word? What that mean?
No, if you can write it. War.
Probably like that. So that thing.
Okay.
Yeah.
Yes. Perfect.
So this on his first book, but then he removed that term. Basically, it's the height trending range. Uh, and I read interesting today about that thing that he he could scalp this type of trade. So if it's like here, the barbed wire, he will fade the top or the bottom for second attempt to break out, because even if it managed to close strongly, there will be pullback back into at least test that barbed wire, and he like to take the scalp for that.
Yeah, it makes completely sense. Yes.
Also, can be spike in channel.
Have you read the first book?
Yeah.
I know that is impossible to read.
The very first, no, I mean I read the reversals. Oh no, the
The
uh
trading price action.
yeah, basically the first of the 3 book series.
No. I mean the reading price charts bar by bar.
Yeah, I started his first book. There is some chapters. It should be similar to that series of book overall. Yeah, I think for those who finish the video course and understand all the main concepts, it should not be that hard. I found
Okay.
it basically very similar to that pre-series book, but maybe uh, the book itself is shorter because it's basically 3 times smaller compared to the series. Yeah, but for someone who reading this for the first time,
No,
definitely
it's
will be
impossible.
hard time to even follow it.
Yeah. But it's like everything. It's like starting making more and more and more sense. Uh,
Yeah,
more after having some practice like this with you.
bar 54 closed below the previous 2 bars. Uh, this is candle 54 is 30 minute close. Ah, no, it's next bar. At this point, this is trending range. This is still second leg up for bulls and top of the range. So it's low probability for bulls and high for bears. At this area, there's still open gap that can be closed. Bulls did not reach their swing profit, which is here, leg 1, leg 2, and measured move of that first leg. In trending range days, those who swing trades, they should be disappointed. Yeah, so those who scalping, they should be alright on a trending range day. those who trying to swing trade, they should be disappointed. So there is high probability that those bulls who targeting this swing trade, they can be disappointed and start to exiting soon. That will reverse price.
And you also have in line with those that took the shorts from that the closing of the bar 30, sorry. So it's the fuel is like fuel to the fire, because you have those that they were short from there, plus the ones disappointed, so it should go.
Yeah, so they are entering back. The only issue is that this is exhaustion gap, which is the reversal by itself. But I think in trending range day it doesn't matter, because basically in trending range day you could have the strong bear bar, then strong complete opposite reversal, then again strong bear bar, and basically you are fading at the top and bottom of the range, going against those strong bars. So they are not that important on trending range days like today.
It's completely trending.
The only issue I have that they did not manage to set the high a few days back, so they still can try to reach here. For now, they're making higher low with that. It can be a very broad
Yes.
channel.
Yes.
This is new inside bar, and this is possible trap zone for bears. They are reaching that steep channel here. So it's now always in long, and there should be some buyers, or if it broke the channel, there can be buyers. Then also the EMA test, expanding the triangle, the bottom of the triangle is here. So probably had to try to break even. In trending range days, it's usually very easy to get out if you drop, like this short here.
Yeah, that was not a good idea, because we were in the middle of the range.
Yeah, but the trade itself is bad. That
Yes. Yes.
this low probability, this high probability, and because of that, if you skip
Yeah, we
all the
took
trade,
that.
it's better to hold. But yeah, overall, even how big the range is a bad trade. And that was decent enough disqualifier for I1 entry or second leg, because bears did not manage to take 2-1, only 1-1. So now they tested the expanding triangle, the bottom of the triangle. Bears lost 9 points. They already reached 17 points. So they need to close lower. Now there's possible trapped sellers below the mother bar. Big enough bars compared to those. So those swing traders, they can start to become disappointed, but it closed with big tail, small body, closed below the mother bar low. Now this such leg bears maybe can get second leg down. but I'm not sure about the tail. Big. From pull bar, 12 points. So I can go again for 15 points, which is the dropped wires here, and 20 points above the drop zone. Same as here. Closed above the previous high and above the break even for bears or for bulls. So it's a sign of strength for bulls. They're 1-to-1. And bears, again, the bears managed to take only 1-to-1 from that strong bar and not B-to-1. This is high 1 or with the new low. This is high 1 at the middle of that expanding triangle. Target is the top of the triangle. Given that bulls are, since that reversal, bulls are making money, here the entry bar here and here, they're making constantly at least 1-to-1 and 2-to-1. There's higher probability for bulls to make 1-to-1 at least on strong bull bar. Now bears will try to do the second leg down after that. Since it's returning back to drop zone, that letting drop sellers to exit, it closed below the break-even point. So those who entered it close here and here, close below that. So it's a little bit stronger for pairs with that bar because of the reverse, the previous bar. But the bar itself is dodgy with tails. Low is still holding. So now there's trapped buyers who take high 1. Middle of that expanding triangle. Inside bar, the bulls managed to break even. So they were trapped here and they exited that here. This is sign of strength for bears. So now if next bar managed to come back to here, that means they are not trapped anymore. So that will be a sign of weakness for bulls because now once the bulls exited, it should now continue. And if coming back, then that means they are still present, they're still holding. This is inside bar, and because of that, that make a reasonable entry, risking the bar and basically the stop at the top of that inside bar.
I think then in this kind of scenarios, it's better to wait to, because it's like too choppy.
Yeah. Yeah. Just right now, it's a higher probability for sellers because it's closer to top of the range. It's on the in the middle of the triangle. But there is now disappointed buyers who cannot take swing trade, so they can accelerate the downtrend, and bulls finish 2 legs, which is very low. So on trending range, after the 2 legs, usually it reverse. So in trending range, it's a good strategy to fade the second leg, betting that it will fail. Yeah, but it is bad example because it's very volatile, very rangy. Those bears, they will try to get second leg down,
And
and
if that happens, it's going to go super fast to the.
yeah, it could reverse. Now that gap closed, but there is still open gap below.
Yeah, I believe I will have to leave it here because they are going to kill me.
Okay.
Sorry.
Okay, yeah. I will finish
Um,
that. Those it's candle. It's bar 57. Yeah,
okay.
I
Okay.
will. I will finish it to finish the day. Yeah.
Okay. If you keep recording, I can watch it later.
Okay. Yeah, I will continue. And if you want, you can watch.
Yes. 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 Of course. So I can leave the meat, but if you continue relating the the behavior, I can watch it later.
Mm-hmm.
Sorry about today that I was late and with that problem.
Yeah, that's not right. No problem.
Okay, thank you very much. Um, talk during the see you tomorrow in the monthly review.
Yeah, I probably will be here. Yeah.
Okay, okay, okay.
Okay. Yeah. So see you tomorrow then.
Thank you, Ilga. Bye bye.
Yeah. Thank you. Bye. So now possible second leg down for bears inside bar. Good entry below the bar 57. Stop above that inside bar. It's very risky and not reasonable trade because it's in the middle of that expanding triangle. The bears have a possible double top, something like that. Yeah, but uh, the bull's cap still open because it did not reach that low. Yeah, it closed this cap, but that's still open after that trend bar. Okay, next bar. So bar 58 triggered the entry for inside bar and reverse. So make those trapped sellers to stop it and trigger the reversal for those who try reverse the inside bar. Now this is possible second leg for bulls, something like that. Maybe for bears, for the bears that was the leg one, leg two. Still middle of the expanding triangle. Now there is dropped sellers from that mother bar 56. Still holding that trend line from that top. We broke it up, now holding above. The pullback did 10 points. Now they did 7.5, so that their 10 points will be one tick higher than that. This is something important to note, that in a trending range, they are constantly going for profit taking, for like here for 10 points above, 10 points below. So once that tight trending range happened, from here they did 5 points. So if you take that pullback, from that pullback it did 7 points, from that high to that low it did 10 points, then from that low to that high it basically did another 10 points and overshoot for 12 points. Then from that high to that low it did 10 points, and then try to do 20 points. From here it did again 10 points and 15 points. From that high to that low it did 10 points, and now it came back to 10 points. So in trending range it constantly getting 10 points on both sides. And that's basically the profit taking for those scalpers inside that range. Strong enough bull bar inside the trending range, possible second leg for bulls to here. Low probability entry, but at the same time this is high 2 entry, because high 1, high 2, and high 2 are higher probability entries in a trending range and in general day as well. Another inside bar, dodgy, so nothing happened. Still middle of that triangle, holding the EMA. So it tested once, second time, holding above. So another bar, so bar 60 is 40. So that was 1 hour. This is another hour, and now another 1 hour bar closed. So this 1 hour was in a trending range. Now it can transition into the other state. This is expanding triangle, and now declining triangle. So that diamond pattern. It's a breakout mode. On some higher time frame, it's inside, outside, inside. So something like maybe this is inside bar, this is outside bar, and this is inside bar. This is basically another breakout mode, and if it managed to basically entering from that inside bar above for breakout, and if it failing, exiting below of that inside bar and reversing the trade. Still disappointed swing traders who for now cannot take profit. Bull, if this is second leg up for bulls, they still did not get second leg. holding above EMA. So now this is breakout, possible breakout of that tight trending range. They managed to close above the trap zone, so they could continue. This is second leg for bulls, but since this is 1 hour close, it can now transition to another state. It almost reached the profit taking at 20 points is here, and that 10. Next bar is Doji. So it got breakout, but a weak follow through. Still bull bar, so it's minimum what they wanted, they get. And that was the break-even point for trapped sellers. They managed to break even. Yeah, for now this is breakout mode of that inside bar and retest of the breakout, so it still possibly can continue. Big bear bar, big disappointment for bulls because they were very close for their swing trade profits. This is strong reversal. It was possible wedge, but with lower high from here. Now strong bear bar. Bulls will try to break even here. Bulls did not get 1-to-1 from the entry bar here. Their 1-to-1 was here, so they will started to exit as well. Bears closed 9 points, 9.5. Still not enough for bears, the same as they did here. They closed 9 points, so that was not enough. And here again. So they need to close few ticks lower to continue for 20 points. This is spike and some kind of channel. Yeah, but now middle of the range, top of the range. After they closed the outside the trap zone, they reached the next target, the 161. they reached the 20 points, and there was profit taking. Now for the bulls, they reached 15 points but closed only 9 points, so still not enough, but very strong bear bar, the strongest bar in that trending range. So if they get a follow through, it will be a dominant feature of that trending range. Strong continuation for the bulls. So at this point, this bar 60 was the 1 hour close. So that was inside, outside, inside. It break out above that, triggered the buy, failed, reverse, stop them out, and make them reverse for the other side. So now this is probability to go lower. Bears managed to close 13 points. They already reached 15 points, so now they can try go for 20 points. Bulls were not able to break even at the 50%, and there's trapped buyers at the top of the range as well. Strong leg down, but trending range. The sellers at the top, buyers at the bottom. This is the first close below the EMA. That if the next bar managed to close bearish below the EMA, it will increase the probability for sellers. Still did not manage to close outside the drop zone. For now, it's possible that it was big up, big down, and now it's possible that will hold at the higher part of that 50% of that reversal. So now it's possible to be ranging here. So right now it's at bottom of the range, but bears will want the second leg down. Bull bar 7 points. For now, bears cannot close 2 consecutive bars below EMA. Bottom of the range. So possibly can start reversing, but for now there is dropped buyers. Their break-even is above the bar 64. The bears will want second leg down. So it's for now it's high probability that those bulls who enter one tick above the bar will not manage to take 1-to-1. Bears make 18 points, manage to close 13 points, and bulls 7 points. So bulls can try to get 10 points, which will be their break even. their entry was not triggered. This is now 2-bar reversal with bar 65. This is 30-minute close. Bulls are still trapped. Still high probability for lower prices for bears to get second leg down, and possible failure of that inside outside inside where they're triggered entry and reverse to the opposite side. Now it's a new mother bar with 65. Possible trap zone for bears and trap zone for bulls. If next bar manages to close bearish, then there will be 2 consecutive bars below EMA. There's high probability that it will make the lower low from bar 65, but now there will be trap zone for sellers. And there is 20 points. They closed 15 points plus 1 tick. A little bit not enough for 20 points. They need to close 2 tick lower. Okay, so they finished 2 leg down. They reached 20 points, closed 17 points plus 3 tick. Now it's possible reversal for, because bears finished 2 legs, they reached the 20 points. They are trapped at the bear trap zone, and they are at the bottom of the trending range. For now, there is possibility that the market will end up at the higher part of the trending range until the end of the day. Now new inside bar. Doji bar. It keep going on that trend line that is broke. And it also was the higher high major trend reversal from that leg up. It broke the channel and then make higher high failed in reverse. There's a trend line that it broke. And now grinding lower, holding that trend line. So now inside bar, bulls, bears finish 2 legs. Now bulls can reverse with the new mother bar there is possible trap zone for bulls and trap zone for bears. From that mother bar, there is dropped sellers. Now it managed to close 2 consecutive bars below the EMA. But now possible bottom of the range, and bulls can take black control. Strong bull bar closed 11 points. They will try to reach 20 points. Strong enough bull bar to expect second leg up. Closed the EMA still inside the mother bar. Possible trap zone. Strong continuation, now 3 consecutive bull bars. They will, at some point, they will get the second leg up if there is pullback. And now it's closed 12 points. They are 1-to-1 at 20 points with the entry from that strong bull bar. Now 4 consecutive bull bars. Reached 1-to-1 from that bull doji. Closed above the trap zone, so they could continue. It's a good entry with for the pullback. Yeah, but this is trending range day, so they can be disappointed at some point. They make 1-to-1, and there's 2-to-1 is here, whereas 1-to-1 for that strong bear, strong pull bar. So they can still reach here, but they need to break out that trending range. With such a big pullback, this is now not that strong, that inside, outside, inside, because it broke it higher, then broke it lower, and reversing back. Closed above the previous bar and closed the bear gap. No, the bear gap still open, so it still can continue. And once it's closed above the trap zone, their next target is 61.8 of that mother bar. 4 consecutive bars. This is first time it happened in that trending range. So there is pullback, 2-bar reversal, but for now not enough to reverse it. There are gonna be more buyers than sellers. Drop zone for the sellers, drop zone for the buyers, new mother bar. Strong leg up, they can be disappointed, but they still should get the second leg up. So with reasonable entry, they managed to close 2 consecutive bars above EMA. Considering this as the reasonable entry with risking the low and for profit taking, maybe not here because this is like the swing trade and this is low probability for to expect a swing in trending range day. But the minimum target will be the high of that leg. So that's gonna be good entry at 2 to 1. Bar 73, second bear bar, it dropped buyers and closed lower, still in drop zone for bears, closed only 5 points and 2 ticks. Need 1 tick more for continuation. Still good entry for bulls, but if bears will get third bear candle, then it will be a sign of weakness for that strong leg up, because bears never managed to get 3 consecutive bars since it reversed. There were only 2 bars, 2 bars, 2, 2, and now 2. So if next bar is bear bar and it closing 1 tick lower, they could get for 10 points. They can try to close below the drop zone and they can try to continue. But for now, reasonable buy, fading this bar 73 for bulls second leg up. Bar 74 is weak bull bar, but good for bulls. It's dropped sellers at the drop zone. It did not let to enter those who want to take 2 to 1. Maybe if measuring with if the stop is below the strong leg, then their entry was filled. This is high 1 or high 2. After the first leg, it triggered high 1, but bet buy bar, and then reasonable entry bar, high 1 for second leg up. Minimum targets of the highs of that first leg. Still higher probability for bulls to reach the target here. Now bears managed to close 11 points, so they can go for 15 and 20. Those bulls still will try to get second leg. Bears possibly finished second leg down, but strong bear bar. This bear bar overwhelmed that bulls pullback. For now, disappointed bulls, they did not manage to get 2 to 1 from that first entry bar and did not manage to get 1 to 1 from that strong bull bar. coming to bottom of the range. Until that leg is holding, it's still good for bulls, but this bar closed 11 points, so they can definitely continue, and they closed outside the trap zone and outside the first target. They already reached the 1-to-1 from that mother bar. The 1-to-1 of that entry bar, bear bar, is not reached yet. So if they manage to get 1-to-1, then they will likely to get the low of that bull leg. And if they get out the low of that bull leg, then they will not get the second leg up. So now possible trapped buyers. Their break even is here. The trapped sellers managed to exit at the tick. Now bulls, they managed to get break even and closed at that level, so it's telling that they are holding. The bears finished 2 legs. Bulls want second leg down still until that low is holding. Bulls only closed 4 points, which is not enough, and bear closed 11 points. So the bears can still can continue for 15 and 20 points. This is nearly end of the day. Most likely it will stay in the trending range, since only 8 bars left, or even 5 bars. I'll try to break even with my short. Most likely it will stay on that trending range and hold that bottom. Bulls still try to get the second leg up. But they close only 4 points, which is not enough. Managed to take high, but small body, big tail. Bulls get second leg. Leg 1, leg 2. Closed 16 points. Closed outside the trap zone and outside that second target, so they could continue. But this is top of the range, so it's reasonable fade, fading the strong bar, betting that it will fail. The swing traders still did not reach the target, but they are very close. They got 1-to-1 from that entry bar here, and their 2-to-1 is here. Since this is trending range, they unlikely will get 2-to-1. Those who entered on that first leg, their profit taking is here. So it can be considered as a swing trade as well. So they should not get profit as well. Because if they get profit here, then those will get profit who taking this swing. And there was leg 1, leg 2, so this leg 1, leg 2, another target. That means all those swing traders will make money in trending range, which is they should be disappointed because it's trending range day. So since bulls finished 2 legs and it's a strong leg at the top of the range, there's higher probability that it will fail before it, and lower probability that it will continue to go higher. Good continuation, so now 3 consecutive bars, and they let them take profit. So swing traders managed to get their profit. It's breakout of the trending range, so this is first bar, and with profit taking, it can now reverse. So they now need to get a follow through. The following bar need to be another bull bar. If it will be bear bar, then there will be strong selling. They reach 20 points. Another reason to take profit. Still they did not reach 2 to 1 from that entry bar. Now they closed gap and they closed it here. Four consecutive bull bars and now successful breakout because 2 bull bars above that. So now it likely will test the high, and it will even try to test the high of the previous days. Momentum decreasing, the bar sizes are decreasing. Now they closed 23 points, they will go for 25 and for 30 points. Now, all those entries are getting 2 to 1. Those are still not reached here. But with 4 consecutive bars, they will likely be reached. Weak follow through, but still bull bar. Still can try to continue. Reach the last targets. And the high still holding by 1 tick. And next day started with a gap up. So at the overnight it broke the high and broke that Friday high out here. So with that short, here, because since bears did not manage to get they get 1 to 1 but not 2 to 1, it's reasonable to exit at high 1 for bulls for second leg up. But even if did not, the market gave chance to exit several times here, 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 and here. So market did, it has the big up, big down, confusion, trending range, then it broke that 50% and spent its time at the top half of that 50%, like